Welcome to the Fintech One-on-One podcast. This is Peter Renton, Chairman and co-founder of Fintech Nexus. I've been doing these shows since 2013, which makes this the longest-running one-on-one interview show in all of Fintech. Thank you for joining me on this journey. If you like this podcast, you should check out our sister shows, Pitch It, the Fintech Startups podcast with Todd Anderson, and Fintech Coffee Break with Isabel Castro. Or you can listen to everything we produce by subscribing to the Fintech Nexus podcast channel. Before we get started, I want to talk about our flagship event, Fintech Nexus USA, happening in New York City on May 10th and 11th. The world of finance continues to change at a rapid pace, but we will be separating the wheat from the chaff, covering only the most important topics for you over 2 action-packed days. More than 10,000 one-on-one meetings will take place, and the biggest names in fintech will be on our keynote stage. You know you need to be there, so go ahead and register at fintechnexus.com and use the discount code PODCAST for 15% off. Today on the show, I'm delighted to welcome Ralph Dangelmaier. He is the CEO of BlueSnap. Now, BlueSnap is all about payments. They are what's called a payment facilitator. They're also providing embedded payments, which we get into in some depth. You know, Ralph talks obviously about how the BlueSnap platform works, how they're different from other payments companies like Stripe and Adyen. We talk about digital wallets. We talk about alternative payment methods like account-to-account payments, RTP. We even talk about crypto payments. We also get into what it means to be a payment facilitator and how their embedded payments product works and why he thinks that's the way a lot of payments are going to go going forward. He talks about his work he does with the ETA, the Electronic Transaction Association, and much more. It was a fascinating discussion. Hope you enjoy the show. Welcome to the podcast, Ralph.
Thanks for having me.
Okay. And for those watching on video, he's got a beautiful picture of Colorado that I believe you actually took yourself when you were out here skiing near Telluride. So if you're listening on a podcast, you'll just have to take my word for it. It's spectacular. Anyway, let's get started by giving the listeners a little bit of background about yourself. And you've had, I know you've been at BlueSnap for a while now, but tell us some of the highlights of your career to date.
So I've been in fintech for about 30 years now. Started my career in banking, left banking, and went to a early stage fintech company that helped create what we called regulatory reporting for the banks, which was a big deal in the 90s. And then got on the internet bandwagon really early. Went to another company after that. We sold that to SunGard, and that company built internet banking products for businesses. So this is for banks to sell to businesses. We were the first business banking product online. The company was called P&H, and it was successfully sold to ACI, where we helped ACI grow dramatically globally in 2006. So I was there to about 2013. And we helped invest in the first cloud service they offered globally. So that was a nice transition and nice growth. And saw the e-commerce market starting to take off, had met with companies like PayPal, Braintree, Stripe, and Adyen, probably heard of them, and said they're doing something really cool. And a group of investors had bought a company in Israel that was actually helping Startup Nation, Israelis, sell globally. And we said, wow, these guys have a really good core concept infrastructure. If we could take what they have and bring that to the rest of mainstream North America and Europe, I think we've got a real viable company and product to sell to merchants. And so at the end of the day, what BlueSnap does is we help merchants accept payments online, not just with cards, with multiple payment types. And we have now pivoted to where we help platforms sell to merchants online payments. They can sell payments online through their platform. And I think, Peter, this is the next trend for the next 10 years. So it's been a great experience. Having the background in payments for the last 30 years has really helped in what we do here at BlueSnap. And we got a great team of people across 47 countries that help our customers.
Right. Got it. So I want to go back to the private equity deal. Were you part of that deal, or did you come in after the fact? And tell us a little bit about sort of the history there.
Sure. Well, the answer, Peter, is really both. I came in after the deal was acquired by a company called Great Hill Partners. They initiated this concept. And then when I got here, we decided that we should do a capital raise, and we partnered with another predominant, well-known private equity firm called Parthenon Capital. So between Great Hill and Parthenon, they were the founders and investors in what BlueSnap is today.
Right. Gotcha. Okay. So then, and like you just touched on it, but I'd like to sort of tease it out a little bit more. It sounds like there's two components to the business. I really would like to dig into, firstly, maybe start off with how you actually describe a BlueSnap today to a fintech audience.
So the fintech audience, there's actually, Peter, there's two audiences, right? There's a fintech audience, and then there's a merchant base, and then there's sort of platform. So I kind of have three little pivots to the story to the same thing. But let's start with fintech, because I think that's maybe who a lot of your audience is here. Mm-hmm. So we're a global PSP or PayFac. And what that means is we successfully accept and pay out merchants in about 200 countries using multiple payment types, multiple cards, and multiple currencies. What's interesting is what we spent the last 10 years building was not just our technology, but the rails or the payment infrastructure to do this in 47 countries locally. And why do I emphasize on locally? Anyone in payments knows that the fees to process a payment internationally, cross-border, cross-country, whatever word you want to use, is significantly higher, anywhere from 1% to 2% higher, than if you can process the payment locally. And it's amazing how many merchants actually end up making mistakes of sending payments cross-border or internationally without realizing that they have a domestic office and they can send the payment and settle it domestically. So that's really one of our special strengths, is we're a global PayFac that supports multiple payment times, multiple card networks, multiple currencies locally in 47 countries. That's how I would talk to a payments company.
Right. Gotcha. Okay. So then you have to have a bank account, I presume, within that country to make to save on the fees, right?
So we have to have the bank account, but the merchant doesn't have to.
The merchant doesn't have to. Okay.
No. The merchant can have a bank account wherever their bank account is. So they can deposit the money in their bank account in whatever currency they want. And what a lot of people forget is, let's just say we're in the United States, since we are right now, and you want to get paid in euros, you can open a euro account in the United States with one of your big banks, and we can pay you in euros in the US. The real key thing to stay compliant with the card brands, and again, we're talking fintech now versus merchants, is to make sure you have a legal entity or you have operations in that country in order to process it locally. Now, that generally means you have a bank account, but you don't have to.
Right. Gotcha. Okay. So then, is your target market those merchants that they're operating in more than one jurisdiction? Is that or is it really any merchant?
So look, it's really any merchant. We like the merchants to be a little bigger. We tend not to focus on startups. We tend to focus on a little more established businesses that sort of fit what I would call middle market. If they have operations in multiple companies, our target market, right, is significantly stronger and our value prop is significantly better. Mm-hmm. So that's where we really thrive, is someone does have cross-border. Yeah. That's what we tell our account managers and our business development teams. That's where you really want to chase business, because there's a lot of opportunity to save the business money. And right now, the ROI has been the real play. I mean, two things have benefited us recently, Peter, right? One is the pandemic came along. Everybody started buying online. Our business doubled. That was good for us, maybe not good for the world, but it's good for what we did. And the second thing came along is this little recession, whatever we want to call it, downturn. People are looking to save money. The calls we have right now with merchants and platforms to try to reduce costs, that's really the call. And if you don't have an ROI-based or cost reduction-based platform like we do, it's extremely difficult to move business forward. So this is, both of those things kind of played into the platform that we developed for our merchants.
Right. You said your strength is sort of, operating locally in so many countries. And obviously lots of countries have, local payment methods that, don't really exist outside that country, but it's something that people inside that country use a lot. I'm thinking about Brazil, for example, with Pix that, became a phenomenon in the last couple of years. So do you kind of get on the ground and really work with these local payment methods as well as obviously the major cards?
That's right. So think of there's 7 or 8 major card networks. There's hundreds of local payment methods. We have about 100 of those. And then we also have to have the currencies because those payment methods usually only operate in those local currencies.
Right.
But things like in Australia or in Canada or SEPA in Europe or Ideal in the Netherlands or even ACH in America, these are not well known by people that sell outside of the country. Right. Mm-hmm. So if you went and pulled a bunch of merchants and said, give me the most 5 predominant payment types in Europe, they wouldn't be able to tell you what they are. And they're missing out on sales. And even if they can get them set up, they usually can't do the foreign currency transaction. So therefore, it doesn't work. So we provide a connectivity to all of these payment types, currencies, and rails so the merchant doesn't have to. So that's exactly the strategy, Peter.
And do you then advise the merchants on okay, these are the 5 most popular payment methods. You shouldn't do, American Express or whatever it is. You should focus on these 5.
Yeah, you don't want to do American Express in Germany, for example. And sorry, American Express, but we do. We look at, it's different if it's B2B or B2C. It's different on the value of the ticket, how big it is. Is it a $3,000 legal bill or is it a $30 hat? So that drives a little bit the popularity of the payment type. But we actually do consult. And that's why we need to work with businesses that are a little bigger, right? It's a little hard to figure this out on the website.
Right.
And a lot of guys that go to smaller companies like PayPal or Stripe or wherever it may be, even American ISOs, they end up kind of setting up payments, let's just say inefficiently. I don't want to call it wrong because there's no such thing as a wrong payment when it gets processed. But they can be more efficient. And that's what we're trying to do is help these merchants be more efficient and reduce the cost and the success in getting the payment approved.
Right. So then you mentioned Stripe. Obviously, they're a big one in fintech. I'm also thinking of Adyen. They offer, I don't know exactly how you differentiate yourselves. Maybe you can touch on that and just tell us what is the difference between BlueSnap and Adyen and Stripe?
Both of those guys have built incredibly successful, well-known brands for the last 10 or 12 years. And they're very different from our point of view. So on Stripe, you have, millions of merchants obviously processing on Stripe. And so it's very hard for them to consult with them individually and help them be more efficient in payments. So we tend to find when we get with Stripe clients that we can help them increase their auth rates. We can help them reduce their costs. We can help them increase their FX efficiencies. We have options in our technology to plug in different fraud engines or chargeback engines or things. So you don't have to use their stack. I think those clients like the modular approach to that. So in short, there's a lot of opportunity to help merchants as they get a little bit bigger versus the Stripe platform. And also it's hard to support millions of merchants in their model, right?
Right.
And they tend to be, yes, they've got some great press releases and some big clients, but most of our clients are really small.
Yep.
As they grow up, we tend to say you graduate from Stripe. There's a little phrase we use here at BlueSnap.
Right. What about Adyen? Because I think they say the same thing, right?
Yeah, they do. So Adyen's also done a great job building a multi-bank network. But a couple things. I think Adyen has really prided themselves on building a proprietary bank network. And I think when you dig into the details, sometimes the issuers of these cards, Barclays and Deutsche Bank, and we're getting really technical like Wells and Chase, they may not have as high a success rate on the Adyen banks as the banks that we use. So we tend to do a little better in authorization rate.
Okay.
Secondly, Adyen's built a great reputation. And I think anyone's got a good reputation, there tends to be a little higher cost that comes with that. So we find that we can actually provide a little bit of a lower cost service than what they're doing today. And thirdly, we don't really require people, again, to use the whole stack. Adyen really tends to represent that you got to use their whole stack, and people like to pick and choose where they go to market. And then I think the fourth thing is Adyen's built a pretty good reputation in the B2C specialty retail. You've probably seen a lot of that. Their customers doing that. And we see a lot of more B2B and manufacturing. So we've had good success against Adyen for those three reasons I just mentioned, and in the B2B space.
Right. Gotcha. Okay. So I want to talk about digital wallets, Apple Pay and Google Pay as the main ones. And obviously there's others in different countries. They're picking up steam, it feels like, particularly in sort of in Europe and even in the US these days. What are your thoughts on these digital wallets? And obviously, it's really a card transaction in the end. And so I'm sure you process it just fine. But I'd love to get your perspective as someone who's been following the payment space a long time. Are Apple and Google just going to dominate the payment space?
I think they're taking a big bite out of it. I don't know about dominate. I think they're taking a big bite out of it. It's, let's just face it. Apple's done an incredible job, and Android's coming along and educating people how easy it is to use Apple Pay and getting merchants and issuers to accept Apple Pay, right? I mean, big challenge they had to try to get the actual Apple logo on websites or get people to do it. And they've done a fabulous job doing that. So it is a lot easier to use it. And you're right, at the end of the day, it is a card transaction. So I do think they're doing well, and they're going to continue to do well. I think the biggest challenge we saw was merchants thought that they had to pay extra for Apple Pay. And when they found that they didn't, and a lot of people don't realize the issuer actually pays Apple Pay, then they're way more willing to push that out as a payment method on their site. Super successful, and it will continue. We support probably 50 or 60 different wallets around the world. So even though guys are the dominating one, as you know, there's other ones coming, and there's other ones that are country specific, very similar. I think people get confused between a payment type and a wallet. But from a shopper's point of view, it doesn't matter. As long as a logo is there, they'll click out and check out with those.
Right.
Big believer in wallets, and I think it's making life a lot easier for the shopper.
Right. And what about, I'm originally from Australia, where account-to-account payments have been a big thing for a couple of decades now, and we're still not quite there in the US at all, actually. But, Europe as well has account-to-account payments. Is that something that you guys handle yourself or not?
So we offer account-to-account payments. We offer things in Australia and Canada, just like you're familiar with. So that is out there. I think there's a couple reasons it hasn't taken off. Number one is we're not really real time as you are in these other countries. You're much quicker processing and more same-day settled. We're getting there with same-day ACH. We're talking about Fed now, but we're behind, and it's a lot of money to move and change, no offense, versus a smaller country like Australia or Canada. So I think that's one reason. The second reason is people don't understand it, right? They don't understand what works, and people are a little worried, like, who's in my bank account? And so shoppers get worried, so it hasn't driven as much adoption. But we are seeing big adoption on large B2B accounts. We have a couple of real big account companies in Australia, and they've started to bring adoption to their customers in the US. So I think we're going to see more adoption. We're going to see it get bigger, better, and faster, and you'll start seeing more of it. And I think the last thing is, as Americans, we love our rewards programs.
Right.
What will I do without my United card, right?
Me too.
Right? We're Denver, you have to be.
Yes.
Maybe you could do Southwest, but that has really kind of got us all excited here. And it's a cultural thing. Just like the Germans don't like to have debt, we kind of like our rewards programs. So it's going to be hard to get off that little addiction we have with rewards programs. So those are sort of my color commentary on it, Peter.
Right. Okay. So what about some of the other payment rails, alternative payment rails? Like you mentioned FedNow is not actually happening yet, but it will be sometime soon. Hopefully this year a pilot will be going underway. But we've got RTP, that's been the clearinghouse, that's been around for several years now. There's blockchain-based payment systems that are coming. Are you planning on supporting all of these new rails? How do you kind of decide what to support and what not?
We're not going to support them all, but we are supporting, as you know, we mentioned hundreds of payment types today. We are going to go do real-time settlement when that comes as a payment type, and that's more easily and widely accepted. Like in Europe, let's call it open banking. We've already put crypto out there. We work with a partner called BitPay, which is a wallet that accesses dozens of different networks, crypto networks that you can pay with. So we're just not seeing huge adoption on this stuff. We're seeing some, but we're just not seeing huge adoption yet. And I think it really is, it's a little bit of watching the market, but also having your customers kind of drag you into it and saying, we really see a demand for this. So it's kind of like an easy thing you got to balance.
You mentioned crypto. Crypto payments. I know that in in Latin America, where we have a presence, we have a fintech conference focused on that market, and and a lot of them are using crypto, like stable coins, and to do cross-border payments and that sort of thing. So crypto as a payment type hasn't really caught on in this country or in the developed world at all, pretty much. But how do you manage it where some regions are really focused on it and others are not?
First of all, we put the payments out there and we let the customers decide, right? The merchants decide, and some take off and some don't, as you know. I'm a big fan of stablecoin here going into the future.
Yep.
And the reason for that is if you look at where where does innovation happen? It happens really around efficiency or making things faster, right? And so if you look at payments, one of the places that still hasn't been tackled really is FX. Foreign exchange is still pretty expensive. You're paying 1%, 2%, 3%. There's some countries, Latin America, where inflation's 1% to 3% a month. So I think stablecoin is a great new product that's going to help reduce the FX costs globally. And I think you're going to see a lot. So I think we're moving from sort of the Bitcoin crypto world to more of a stablecoin world. And there's lots of efficiencies for that. And I think it's just a great natural progression. So I'm very bullish on stablecoin, and I think that's going to be something we're going to hear a lot more of in this decade.
Right, for sure. Okay, I want to talk about embedded finance, embedded payments specifically, because you touched on it at the start of the show, and I want to now dig into it a little bit. Like, how are you enabling this? Is this like a white label type product? Just describe what you're doing there.
If you think of the core mission here, we're helping merchants accept payments more efficiently, right? And so we sold them directly. And then it was extremely difficult to go into segments like legal, education, camps, right? They were either ISOs or someone like a Stripe, PayPal, and all in those verticals. So we said, geez, if we can work with platforms that sell specifically into verticals, and we can allow them to either white label or not the payment, and let's just call it embedded. We embed it into their software. So when you buy someone's education, camp, or charity platform, you get the payments as part of it. You're signed up as a payments, and it looks like that platform is selling payments. We think that's a home run. And we think that's a trend that's really going to happen over the next 7 to 10 years. So we embarked on this last couple of years. The tricky part was being able to support 47 countries where you can board someone in 15 minutes from all these different countries on a white label environment. And we've successfully rolled out a large number of platforms, and they are having huge success selling into the vertical markets, and we're winning a lot of market share. And so that's where we're putting a lot of attention. And so we're calling this embedded payments because the payment is embedded in the platform and the platform selling the payment. And I'm making a very big distinction between integrated payments, where it's integrated, but you still have a lot of choices. And effectively, the merchant's on its own to decide what's the payments company. And a lot of times they'll get guided one way or another, but they have to decide what to do versus where the platform comes along and says, here you go. Very similar to what Shopify did with Shopify payments. They said, this is the payment method. You can have options if you want, but this is what you should use. And I think many platforms are going to be identifying the strategy.
So then you do like a revenue share with the platform, I presume. So it's sort of obviously probably a lower margin product, right? But higher volume?
Exactly. And I'm not even sure if it's really lower revenue, a lower margin product, because we don't sell it, we don't market it, and we don't support them. The platform is responsible for that, right? So it's really, we're providing what we call PayFac as a service to our payment folks out there to that platform. And we're giving them the same economics as if they were PayFac. So we could do a buy rate on that, or we could do a rev share, or we could do both. So it really depends on how that platform wants to do it. And if the platform is selling in multiple countries, just like we talked about, like our ideal customer profile in the earlier part of the show, then it really increases our value proposition, because there's lots of people that can do one country. There's a handful at the most that can do over 40 countries in the world.
Right, got it. So I want to go, you keep mentioning PayFac, payment facilitator. I just want to dig into that a little bit. What does it actually mean? What are the functionalities provided by a PayFac?
And again, as you know, PayFac and PSP. These are all different terms, and aggregator by American Express. They're different terms given by the card brands. They name these things before. Maybe not the best names, but if you really think of a core, what's a PayFac, a payment facilitator? We, BlueSnap, are a registered payment facilitator, and that's a Visa term. And that is registered because we are allowed to accept and make payments. So we're facilitating the payment. Actually, it's exactly what it says, right? So from the merchant's point of view, I always say internally, we're the bank, right? Because we're accepting the money, taking the money, and we're paying them out. And you need to be licensed and registered in many countries like in Europe or England and Singapore and India and Israel. I think you have to be registered in the United States, but in Canada, but I think that's changing over time. I think we're going to see more regulation in there, but that's really what it is. It means we're authorized to move the money, accept and move the money on behalf of the bank for the merchant.
Right. Okay. That makes sense. So then I want to just dig into the work you're doing. You're on the board of the ETA, and I'd love to kind of get a little bit of background on what you're doing there, and maybe just talk a little bit about the organization itself.
Yeah, well, the ETA is one of these organizations I got involved with about 4 or 5 years ago. For primarily, it was focused on, and it's really extended itself on educating people on payments and the right way to do payments. Mm-hmm. And they've done a fabulous job with their programs there in government relations and education and training. And I think it had a little bit of a stigma in the industry as being what we would call an ISO show, or independent sales organization show. And it's really pivoting to not a broader payments education show, and it's doing things in Canada and Europe now, but really it's pivoting now to help platforms. Because if you think about this, if this is really true, Peter, that there's about 350,000 platforms that we all use every day, and about less than 10% of them are selling payments today. I don't know what that number is going to go to, but our data shows that 80% want to sell payments. How is that other 70% going to get experience and trained on payments? There's not really a good place to go. So ETA has come along and embraced this as really a training, education, support body for this group of platforms. It's not only a great service, it's an excellent organization. It's badly needed by our industry. I mean, people get very, very complicated in payments just in one country. When you start to cross borders, the degradation of knowledge drops quite a bit.
Right. Yeah, that makes sense. Yeah, interesting. So maybe we'll close with your kind of view into the future. If you could sort of peek into your crystal ball. I mean, you've talked about embedded payments. If you look at the payments industry in 5 years' time, are we like, does embedded payments sort of rule the day? Are the wallets now dominating? What's it going to look like, do you think?
Well, I think there's a few things going on. I think the world is definitely global. Global transactions are ticking up like crazy. If you're not figuring out how to sell globally, I think you're missing out on opportunities or support clients globally. I think secondly, unfortunately, we didn't talk about this, but I'll just mention a little bit. Fraud is a massive increase. I think it was up over 80% during the pandemic. So that's something we got to watch. Mm-hmm. I think the third thing is these platforms are going to be offering banking services. So we call that embedded finance, embedded banking, maybe embedded payments. What do we mean by that? Well, they're already doing it right now. Buy now, pay later. They're offering tax services. They're doing compliance work, right? Some are already starting to look at the companies out there like Cabbage offering lending, and many embedded lending. But these platforms are going to be offering banking services to their clients. It makes sense. When you sign up for the platform, you're doing almost the exact same work as when you're opening a bank account. So why not have those guys also, if they're regulated and responsible? I think that's a big trend. And then last thing we talked about is wallets, stablecoin. Those payment methods are going to be more predominant. They're going to be more used. I mean, I don't know the exact numbers, but the use on Apple Pay and Google Pay probably 5 years ago was negligible, and now it's significant. I think you're going to see the same movement here as it relates to crypto and alternative payments, as you brought up, Peter. So you really touched on a lot of things that we think is going to be the future of payments and moving money through your questions of the podcast. And that's how I would summarize it.
Okay, well, thank you, Ralph. It was great to get to pick your brain there and learn more about the payments industry and about BlueSnap. I appreciate you coming on the show today.
Thank you. Thanks for having me.
If you like the show, please go ahead and give it a review on the podcast platform of your choice. And be sure to tell your friends and colleagues about it. Anyway, on that note, I will sign off. I very much appreciate you listening, and I'll catch you next time. Bye.